Good turnaround Tuesday, everybody. How's everyone doing? Hello, Raj. Hi, Brock. How are you, buddy?
Adele.
Ryan. Hi,
How you doing,
Ryan.
mate? Yeah, you
How
all
are
right?
you, bud? Good.
Yeah,
Hugo,
good.
you doing okay? Jay's got 10 pips. Calling people pip pickers. I never heard that one before. it's like an agricultural term.
Yeah.
That's a good one. And Sinatra, how are you? So let's take a look around. What a day yesterday, huh, guys?
Oh,
So-
I turned around last night, eh?
Yeah, last night. So anyway, the dollar is trying. So, yesterday I talked about the potential of a top. We have a lower high here and we are getting a little follow through. So, if you're long any currencies, like I'm long euro, I almost have 20 pips. I could be a pip picker here too. And Aussie, I'm about BE. Aussie doesn't act as good. Cable held where it had to. And guess that was it in gold yesterday. Put in a nice little reversal day. So, any pullbacks, but, I hesitate to do anything in front of the Fed. So if you have any positions on, what I'll do is I'll clean house or move stops to BE if I have money made in front of the Fed tomorrow. So just remember that. So far, this recovery in the S&Ps, I didn't do the fibs. I think we're about 38% back there. Also, NASDAQ, which is acting a little better. Now, we had that recovery yesterday that followed through today. And, I'm sure there's a lot of people, and I heard it yesterday listening to financial commentary on CNBC. Most people are pretty sanguine about this break, and the fact that it came back, the response of buying the dip. I don't think this is, this low is going to hold for that long. I don't think this was the end of the pullback. And, for it to rally into the Fed and maybe be a sell after the Fed, even if they're dovish, is something I'm looking to do. So, like I would fade dollar strength tomorrow if it went the other way. So, yesterday I guess the rest of the week is to find out whether or not this is real. When I look at it, we have an inside day, a lot of confluence here. I don't think we should get through 44 and a half. That's another 60 handles above here. But I don't think that this is the end of the correction. Okay. I still think that we have at least, the 200-day to be tested. So tomorrow we're going to find out if yesterday was real. But I do respect the action in the gold, and silver's got a heartbeat today too. And actually it did diverge here on the daily, higher than this low and at 30. In fact, it looks to me like it could be the second drive in silver where we get a pop and then maybe one more drive. But I thought that yesterday in gold when I was looking at the 2 hour and we were here, we had 2 drives. I thought we could get one more. I don't know if we're going to get one more on that. So 10-year up a little bit today. And, I knew what to do yesterday. Anything new today in front of the Fed, I'm just kind of sitting with a couple of, my long-term bearish positions in NASDAQ and just long a little bit of the euro and Aussie.
Yeah,
You didn't get
I'm
it
in a similar boat. I'm long a bit Aussie as well. Yesterday we had that support I was looking at down at 72.20, 25, held pretty well.
Yeah.
Overnight, also in the Kiwi, we had the RBNZ Hawkesby pretty much knocking out a 50-point hike at the next meeting. Didn't really have much movement in the New Zealand dollar, but it's just got a repricing because some people were thinking about a 50 pip hike. So that's just had that reprice there.
Yeah, its pullback was small compared to the Aussie.
Yeah, the market knows it's hiking. I think it was pushing the envelope a bit, looking at 50 pip hikes. But that was well torpedoed last night. You couldn't get a more blunter message than what he said.
Okay, cool. What do you think? I know you're trying to trade the yen. It looks heavy again.
Yeah, it's a bit in the middle for me.
Yeah.
You know, I'm trying to sit 109. Sorry, go on, Dan.
Go ahead. You're trying to sit with your 109 buy still?
Yeah, 109, 110s on the sell side, and let it play around in the middle. You know, I don't want to get caught. You know, we've got a bit of support yesterday, you know, getting the 20 area. That's a bit middleish for me to have a go at. As we can see, the dip looks very, the bounce looks very dead cattish today. I think you're right. I think, you know, we just got to wait for the Fed now. We're well in that orbit. I think stocks, what happens to stocks today is going to be important. I think if we get up to that confluence, that 44.50 area, that's going to be a big test. If we get above that before the Fed, that's going to wipe out a lot of yesterday's moves as well, isn't it?
Yeah, and a good comment yesterday that you didn't think Evergrande was systemic, and that it's setting up a trade in stocks, and you were, you know, your bias was this was a buying opportunity setting up in this, right?
Yeah, and I bought too early. I got in where did I get in yesterday? Around the 54, 53 area when it made that first dip and held. I got in, managed to knock some out at 72, then got stopped on the balance at 50.
Okay.
But yeah, I didn't get in afterwards. I think euro dollar was a trade yesterday. I don't know how I missed that one at 1700. That was my next level, 1700, 1690 after the 1750 play last week, and yeah, missed that one completely.
Oh, well, you know, you can't expect perfection at the crab table.
No, I'd rather miss the winners than get the losers.
Yeah. Stel, we got down to 22, very, very close to $22 silver. That's been your target for months. What did we get down to? 22.04.
Yep. Well, I got some more of the stuff that I'm accumulating on Friday. So I'm now waiting for the Fed. I think and by the way, I bought some of that uranium ETF yesterday. I was very lucky with that. I got out at 27.70 and I picked it up at below 24 now, and this is within a week. So that was that turned out quite nicely. But what I think for tomorrow is that I have this feeling that the Fed will always err on the side of dovishness. Right. And they have a very good excuse now because this Chinese issue, you know, Evergrande, whatever it's called. Yes, theoretical exposure to that from outside China is not large, but we talked about psychology and how things can slip and domino effects, etc. So I think that the Fed now has a very nice excuse to say, look, yes, we're gonna look at tapering and do everything, but we're gonna see what's happening in the world because things are still fragile. So I think for me, I think they're going to be on the dovish side compared to what the market's expecting. And what's the market expecting? We're expecting a taper to start in November, and we're expecting them to tell us tomorrow how they're going to start and, you know, give us a pace and some guidelines, etc. And I think that they might be a little bit more, how shall I say it, vague, let's say, than the market's expecting. So that's why I think that this movement in stocks yesterday, you know, in the grand scheme of things, nothing's changed for me in equities and risk in general. You know, until the Fed actually tells us this is what's happening and it is a proper taper and we have plans to hike afterwards, etc. Until that happens, I don't think we're out of this directionless sort of grinding slowly trajectory. And we also know that all the other central banks are waiting for the Fed, so nobody's going to move before. And I think at Norges Bank they're going to be hiking on Thursday. But apart from that, Bank of England, and even though we have high inflation in the UK, we have high inflation in Eurozone. I think they're going to be waiting for the Fed, and only after the Fed goes will they start. That's my view. So I think, to summarize, I think we're going to see, unfortunately, we're going to go back to like this slow grind higher for risk because the Fed's going to be dovish.
Still, can I ask a question?
Yes.
Do you think there's, or Dale as well, do you think there's going to be a bit of divergence in stocks between Asia and, let's call it, the West over this Evergrande thing? Because I was looking at the Nikkei yesterday, and that seemed, and Hong Kong and everything, that still seems to be fearing the contagion over there. And perhaps it's a question that we're going to see Asia suffer from this crisis more than we're going to see the Western half of the world. We're going to be watching, eating the popcorn for once. So do you think there's going to be a bit of diversion in stock markets between the two?
Well, theoretically, this is going to affect Asian markets more, right? But already, this is being priced in slowly. So I don't know. Theoretically, yes, but in practice, I really don't know. I don't have a view on this. I really don't. I don't know if you have any ideas, Dale or Blake or anybody, but I just.
The fun part is that there is. Good morning, guys.
Hello.
Hello, mate.
That there is no spillover for the time being. I mean, spillover is super minor from the Chinese events to the developed world, like what's now happening with China and the specific company and companies alike, is something that only happens in China. We don't have companies and we don't have huge Ponzi schemes in the developed world. We don't have major pillars of the economy being built on sand. Everything is fine here, so we don't have to worry about any of that. What we're seeing now in China, most likely than not, is, as we were saying yesterday, a controlled demolition before the problem becomes too big. In my opinion, we have the same type of problems, but probably they've already become too big to solve this way without literally collapsing the financial system.
And you know what? A country like China, the way they're organized, the way they operate, they're actually much better equipped to handle crises like that, right? Because they basically
there's no political backlash.
Yeah, there's a central decision unit. Basically, they make the decisions, they go for it. There's no backlash. Exactly. It's like this needs to be done. It gets done. So
and if anybody has any objections, they magically vanish overnight. Or
in the back of a van.
But they're more like capitalists than us, because they will let things fail. And we will not let things fail.
Absolutely.
I think it's so ironic. A communist country is more they'll let things fail and let capitalism work, or maybe they're creating the failure.
That's mostly Dale, because nowadays, and since years ago, all these labels, capitalist, communist, etc., are just empty labels. That's the problem. I mean, we keep using labels, hoping that the name itself is going to make something be what it is, or at least, give people the belief that, the system works like that: democracy, freedom, capitalism, communism. Everybody uses it nowadays, in a convenient way, but many times it's the what you get inside is not what's advertised.
Yeah, I once had a title that really was hard to live up to: senior broker, until I became 60, and then I qualified. Anyway, Blake, how are you this morning, buddy? What's new? You around? Are you busy?
All right. I'm here. Good morning, guys. How you doing?
Good. How you doing, man?
Good. It's been yesterday was actually, the last couple of days have been great for trading. I mean, came into the week long the dollar. I actually reversed and went, oh my God, look what's happening with Aussie right now. Evergrande missed payments due Monday to at least 2 banks.
What a surprise.
There
What a
is a
surprise.
little bit of that news just hit the wires. So the Aussie just got hit.
Yeah, the
And,
dollar's popping a little bit.
Yeah, that's happening as of right now. That just hit the wires just now. So I'll grab the charts. So, I came in and then I was long Aussie yesterday, got out last night, and I'll show you guys why. Here's the chart. So if you guys want to know why I exited the Aussie last night, we were nearing the, channel resistance. Which, if here on Forex Analytics, you already knew that because you can see the chart's been highlighted actually for days, So as we were approaching that channel resistance, I'm like, I don't want to be long. But now the Aussie just got hit on that. Now I think this is as Steve said, no surprise that Evergrande would miss payments. Their first payment is due, or the next payment was due on the 23rd. So it'd be in 2 days. And now we've gotten word that it's, not going to go through. So, or a couple of the payments to banks aren't going to go through. Is this going to, bring contagion? I want to urge that you guys listen to the interview that I did yesterday with Brent Donnelly. He talks about how, Evergrande is like it's a big deal for the markets longer term. This shows you more of a problem that China is dealing with a slowing economy. He's like, as far as Evergrande goes, is it gonna affect the market right now? He thinks it's like we're looking in the rearview mirror at this point. But
I heard, Blake, that the credit crisis, even in past ones, that they're rolling. It's not just one event, and even Lehman and what happened here, it happens over a period of time. More credit events. It's not just one credit event or one failure is it rolls. It metastasizes.
Yeah. And I think that's what we have to be aware of is that it's going to be something that is evolving, and we are going to be probably just dealing with a slower Chinese economy. And I'm going to leave the interview for you guys to go watch. But I'm going to just leave it at that. But I think it's definitely worth the watch for you guys if you didn't catch it. Go ahead.
It's definitely a longer term event to look for, because we've had Chinese debt issues popping up almost bi-monthly for the last 3-4 years. Oh, this firm's going to be missing these debt payments and that sort of thing, and it there's a little bit of reaction and it gets brushed under the rug. But this being as big as it has gained the attention, because a lot of people have been waiting for this to happen, because, as I say, they've been been watching these other events. So this being a big one, you're right. It's something we need to look at for the future, because is it now going to snowball into a few more different sectors? Are those sectors then going to be affecting the wider markets and global markets more? Because it's not everything is contained. It's not everything contained to China.
But Ryan, in my opinion, there is a very good chance that China is playing again the long game and not the short-term game.
Oh, definitely.
I have the feeling that what they've put in motion, in essence, is an effort for China to be what we've been saying, what has been said about the US. I disagree with this thesis, but I think that's what China wants to do. The least dirty shirt in the hamper when the next financial crisis hits. Because if China manages to clean up many of the sectors that are over leveraged, over indebted, etc., then perhaps during the next crisis they can be like, we've already gone through that. We don't have any big imbalances in our system, so
like last time.
Yeah, if you're looking for a safe haven during this turmoil, whatever the turmoil ends up being, it's us.
Yeah, they're learning from our mistakes, aren't they?
Yep.
Well, let's. I'm going to shift gears really quick. And this is analysis that was sent out to, Forex Analytics subscribers a little bit earlier, but I want to talk about it because I think we'd be amiss if we didn't talk about the S&P and the price action that happened yesterday. So let's take a real quick look at the S&P, and I'm going to set the stage a little bit for those of you guys and gals that are thinking that we got some sort of crash coming. I really am not in that camp. But now that we're starting to break lower in the S&P, I'm actually in the camp that, because we didn't get this. I was really hoping that we were just going to get some sort of blow off top to the upside. Now I'm not in that camp anymore, obviously, with the breakdown in the S&P. But what I'm going to say to you guys and gals is that I think the market at this stage in the game has the capacity for the longer term. Now, when I say the longer term, I'm not talking like, the next, month or two. I'm talking over the course of the next 6 months to year, maybe a couple of years. I think we're going to be in a long-term kind of downtrend consolidation. And it's probably going to be equally as annoying as that this uptrend has been in equities, where, as we come out of this ascending wedge, I think over the next couple of years, you're going to see the market, consolidate, pull back probably towards, this 3,000 range, 3,500, somewhere in this neighborhood. But it's not going to be in one fell swoop if that's what you're expecting. I think it's going to be like every rally gets sold. You're going to get to days where you're like, man, the stock market never goes up again, and it's probably going to be one of those types of environments. That's what I feel as we come out of, this ultra loose monetary policy, with stubbornly high inflation, and you guys, would probably use the term like stagflationary environment, at least in the next, 6 months or maybe year. But anyway, I'm looking at, the S&P, and I am looking to sell it on rallies now. And I want to share with you the market that we've seen here. As long as we're below this broken trend line, which let's just say is basically at this 4,500 level, in the S&P, it's really just here. Oops, I meant to grab this. As long as we're below 4,500, I am not very optimistic with the equity markets moving higher anytime in the near future. So yesterday was a little bit of an overshoot. We got a little oversold. We broke through the support. Got a lot of people caught short. I actually knew a buddy of mine. He was texting me. He's like, I'm doubling up here. And I'm like, oh, don't do that. And he did. He didn't listen to me. Right around this break lower yesterday. And, I think we have the capacity to squeeze higher going into the Fed over the course of the next, next 24, 48 hours. So I wouldn't be surprised if we make it back to like 44.20, somewhere mid-range. Remember, guys, I always like to say ahead of these, key events, the Fed, being a key event. I always like to say that the markets try to find themselves mid-range before, it's rare when you get the market just leaning right into a key support or key resistance into a big event. So in this case, I wouldn't be surprised if we were trading somewhere around the 4,400 level.
Maybe
Kind of where
tomorrow after the Fed, Blake, could it be market recovering, rallying into the Fed, not into the Fed being dovish, but then the market says, well, yeah, they're not talking about when they're going to do the taper, but maybe they'll do it in December. So
Yeah,
until
I
they
think
do it, it hangs over the market's head.
yeah, and that's the thing is I think if the Fed still feels like if the market feels that the Fed is still on pace to taper going into the end of the year, then I think the markets are going to continue to trade heavy. So, we would have to be, the Fed would have to be
We're not going to taper. We've changed our mind.
pretty
It's off the
dovish. Yeah,
table.
they'd have to be
Yeah.
pretty dovish in order to get the markets back up to all-time highs from here, I would think.
They would lose what credibility they have left, I think, if they said that now. don't you?
Yeah, but I'm also in the camp that the Fed's just trying to push this off. Powell's trying to push this off, as long as possible. And I think
Till the
China's
end
just
of his
another
term.
excuse, right? What's that?
Till the end of his term.
Yeah, right. I don't know if he's it. Brian, do you have any thoughts about or Stelios or Steve on Powell and being staying at the FOMC? Any ideas here?
Rumors are that he will be replaced, and I think that usually when you get that type of rumors, that's the case.
Brainerd.
I don't know.
That's
That's
Janet Yellen's girlfriend.
Yeah, might. Who knows? Might be. But once the rumor mill that somebody's getting replaced starts, usually it's not false. Usually.
Yeah, I don't know. I still think he's I think he's going to stay on personally. But anyway, Ryan, do you have any thoughts there?
I think he's going to stay on as well. Brainard's pretty much like for like, so it's not really a change in my opinion.
Yeah, I guess I'm and Stelios, I don't know if you have any opinion there, but regardless, I it's going to be interesting to see if he does stay. Now, I just had one of our viewers ask about gold. Let's look at the gold market really quick, because this is, as Dale pointed out a little bit earlier, yesterday it really outperformed silver. And one of the things that we pointed out yesterday was that we made a little false breakdown here, and then the risk of a move back up to 1780 was high. And so here we are coming back towards 1780. And remember, this is all previous support. Actually, let me remove that.
And Blake, if you go to the left, you have certain definitions for head and shoulder formations. Would this qualify? See the left side, we had, shoulder.
You did talk about this yesterday, and I think it's possible. So when you have here's the way I like to look at head and shoulder patterns. First and foremost, is to make sure that an arm can complete. So that means here's your arm, right? Let me change this really quick. Okay, so here's your arm, right? And if you're talking this,
yeah,
the head to neck has to have an arm to complete. So what you see here is it doesn't.
I see.
Right there. But that doesn't mean it can't. I'm just saying that,
Okay.
For me, it's more probabilities, and head and shoulder patterns are just tough to trade in general. But I think the risk is if you get above this neckline, you're going to have people that are trading it that way. And the fact of the matter is you're going to have a double bottom setting up, and a break above 1835 would be mega bullish. That is a level that, I've talked with a lot of people that are very bullish gold in recent weeks. And that universally, that is a level that everybody's looking at. It is the 618 retracement of, it's 1825, but you can see it's a 618 retracement of this move. And so any move above 1835, I don't care if you're looking at it as a head and shoulder pattern or whatever, or an FU pattern. You can call whatever you want. Anything above 1835, 1840 is going to be bullish. So that would be just my opinion. Head and shoulders or not. So And the flip side of that is if you break through these lows, I think that gold could see a lot lower levels. I think we could see 1,500.
Yeah.
So and that's just, if we saw a move like that, I think we could, or here, it's this way. Let me do it like this. This is a weekly chart, right? So
Blake, John Netto canceled, our guest canceled today, so there's a little more time.
he did.
Yeah.
Wasn't he the Ethereum's going to a lot higher?
Yeah.
That's why he
$7,000.
canceled, I assume.
Huh?
That's why he canceled, I assume.
No, he said by the end of the year it'd be
By the end of the year. Okay. It's going
$7,000.
where? 7,000? 70,000.
7.
70?
7.
With this
Seven,
Venus
no.
770 makes
It's
little
doubling from
difference.
here. Well, let me just say this. I actually bought Ethereum yesterday and I got stopped out in Asia. It was a nasty. That was my losing trade of yesterday. I bought Ethereum here, right at where we're currently at. I bought it at 30.65. And then when it dropped through 29.25 through this support here, I got stopped out last night. And I was like, and then then it reversed. Look at that little wick in Asia. That was nasty. That stopped me out. I was like, no, I was really looking forward to, getting a nice little bounce back to 3,400.
Then they can play games with this stuff.
It's definitely the algos are starting to make their way into the the legacy crypto markets. The way I feel.
Stop hunt to plenty everywhere.
They are. So
if it's an indication to you, Blake, yesterday night I received a phone call. It was from the ichthyologist that has built our aquarium. I have an aquarium in the house. And he has started since almost a year ago, quote unquote, investing in cryptos. So he called me yesterday to ask me what do I think about the situation in China and if it can spill over to crypto prices.
So he's basically worried, right?
Yeah.
Yep.
Oh,
What did you say?
Sell the house and buy more.
I told him what I told him some time ago, that he should be cognizant that he's in the riskiest of risky investments, and that clearly we go into a prolonged risk-off mode, which I don't think is the most likely scenario here. Cryptocurrencies will suffer dearly. That's what I told him.
All you had to do was say, "Don't be a fish."
Yeah. if he does his ass, he can't charge you more for your aquarium.
now it's actually pretty funny. But I got to ask Steve, you have an aquarium in your house?
Yes, I do.
Well, why?
When I renovated my house in 2014, it was a childhood dream to have an aquarium. So it was my opportunity to get one.
Oh, okay. So
is it built into the wall?
To the wall,
or
yes,
something?
yes.
Oh, wow.
Yes.
But after COVID and being stuck in your home for let's say a year and a half, don't you feel like how the fish feel?
Yeah,
fish freedom, baby.
Guys,
fish freedom.
Anthony
Sorry.
just wrote here, fellow Greek wrote.
Fish lives matter.
You see
fish lives matter. That's right.
Guys, fellow Greek
Steve,
here,
you
Anthony
really
wrote,
irritate me now.
He wrote, Steve is turning into a Bond villain. I love that. he has cats. He has 2 cats as well.
True, very true. Very true.
He's got and he walks around with his pinky finger in his mouth saying billions. Like Dr. Evil. All right. Anyway, all right, guys. So since we don't have our guest here, I guess we can spend just a couple more minutes talking really fast. I want to, we looked at the S&P. I think it's also makes a little sense to look at some of the other markets too. Just look at the NASDAQ. The NASDAQ actually, is still, regardless of, here, let me remove this really quick. Regardless of its move yesterday, notice how we are still making higher lows. So that's something that, we need to, keep in mind. And this, if you look at like the NASDAQ, like channel, if you will.
Yeah.
Okay. But while we're above the NASDAQ 100, while we're above this 14,700, we are still continuing to make higher lows. We break below that. It's, a little change of trend, if you will, a start, because we still have higher highs, higher lows. Move below 14,007 would be a little different. Here's your Dow, actually now making lower lows, but the Dow has very much underperformed, right?
Yes.
And somebody had just mentioned the DAX, and we should probably take a look at the DAX. Very similar to the Dow. We had briefly lower lows, but you can see that support is really important. 200-day moving average just below that as well. So I would say if the DAX starts trading, below this 14,800 level, you have to realize not only is it cleared, levels that we haven't seen since April, but it also would have, that means it would have cleared the 200-day moving average as well. So,
can I see your IWM chart, Blake? It's right up there.
Yeah. Let's we'll take a look at the Russell. Here you go.
Nothing has happened here for months.
No,
it's still, is this consolidation or distribution?
I would think it's
we'll
distribution.
Find out.
Yeah, we're gonna find out soon, right?
I've been asking for 6 months, so I don't.
But we are below the 200-day moving average, which I think is a risk. So I think now this is going to be. I would say if stocks do come under pressure, you're going to see the IWM and the Russell really just start to break lower. I think this is where, because I talked to Mish over at Market Gauge, and she was really bullish on IWM. But she also felt that if it broke down, this is going to be one of the bigger breakdowns. And I'd have to agree because of the consolidation. We haven't seen new highs in all of 2021. So, or since the beginning of 2021. So yeah, I would think this is more of a distribution type of move that's setting up, but that's my.
Could I answer Sansi's question? NASDAQ should outperform in the stagflation.
I was about to do that, Dale, but go ahead and do it.
Go ahead, Steve.
I think it's the exact opposite thing.
Yeah, I do too.
Yeah, the exact opposite thing.
Will do better.
Yes, exactly. So if indeed we get in a confirmed, accepted stagflation environment, because we're already in one, but central banks just don't admit it, and by cooking the books, the stag part of the stagflation is not showing up yet. The Nasdaq is the one that's going to suffer the most,
because yield should go up during that environment too, and tech feels more pressure, whereas cyclicals can handle higher rates. Because
anything that's more leverage, that's more a bet on future outperformance or whatever, like Nasdaq is the perfect example of that, is going to suffer dearly. So in my opinion, and to be honest, I think this is more or less an axiom, something like that happens and the Nasdaq is going to get decimated.
No, I guess we're going to soon find out if we're really in a stagflation environment or not. It depends on how persistently high this inflation continues. So
did you see OECD's assumptions, Blake?
No.
They now assume that inflation is going to be higher for the next 2 years than expected, but they think it's likely going to go away afterwards. So they know it's going to be higher for 2 years and likely it's going to go away.
So what do you think of that?
They keep changing. They keep changing what they're saying, right?
Another wet finger in the air.
Yeah.
They didn't get it. They didn't get the prior forecast right, is what they're saying.
If we have stagflation, does that mean that there will be more stag parties?
So basically what we get globally is one by one institutions, banks, etc., accepting that inflation is a problem, steadily accepting that it's going to be a problem for longer than initially expected, and hoping that it's going to go away. So they accept that inflation is high and it's going to remain high. And the part about going away is hope.
Yeah. What do we say about hope in trading?
Yeah, exactly.
Yeah.
All right, guys. Well,
yeah.
we're gonna cap it at that because we have our webinar coming up in about a half an hour's time. I want to thank everybody for being here today, guys. I want to thank you all for being present here, and we're gonna see you on the Morning Edge in a half an hour's time.
And for all you energy people, we have Anas El-Haji tomorrow. And it's been pretty good in keeping us abreast of the managed energy complex.
Awesome. All right. Well, guys, have a great one. And thank you so much for being here, everyone. And I'll see you guys, for those of you that are Forex Analytics subscribers, I'll see you on the Morning Edge in about 30 minutes.
Thanks,
Good
everybody.
hunting, everybody. Don't just count your pips, count your blessings. I think hanging out with a crew like this is definitely a blessing for me. Hope it is for you guys too. See you guys tomorrow.